Hi, Todd VanDenburg here with VanDenburg Capital Management and another Uncommon Sense update. So yeah, that just happened. The Dow just finished down 1,175 points. That's the biggest single day loss, point loss in the history of the Dow. Now we are not anywhere near the single largest percentage loss, but these big point losses they're concerning. At one point today, it was down 1,600, but it pulled back up, finishing the day down 1,175. So what's going on? Well, first off, it's not the fundamentals, which is what we focus on. Fundamentals meaning employment data, earnings data, income data, job growth, things like that. That's not what's going on here. When you look at those data points, things that demonstrate what's going on in our economy, they all look positive, and they're continuing to look more positive. So what happened was really a technical correction, and a technical correction means that there are people who invest based upon trends. Trends of stocks going up or trends of stocks going down. They look for patterns, and they try to make some investment guesses based upon those patterns. So early last week, we saw some losses generated because of concerns that the wage growth in the United States had accelerated, and that might cause the Fed to raise interest rates more and faster than had been anticipated. And that started this process. And with technical traders, there's no telling how much they're going to jump in, but once they start to jump in, then other technical traders who use computer programs generate additional selling pressure, which pushes the market down. The Dow went down from 1,000 to 1,600 and back up to 1,000 in just a handful of minutes. And that's just not humans. That's not you or me generating trades, buys and sells that are causing the market to go up and down. So what I want you all to focus on today is, hey, if you're an investor, which most of you are, this is an opportunity maybe to look for some bargains, while keeping an appropriate amount of cash, emergency fund money. Do not use your emergency fund money to try to buy on this dip. Maintain your discipline, keep your cash reserves where they need to be, safe and liquid, and then as you have additional opportunity, or you see things that look like a great bargain, or even better, if you're working at a job that has a 401k, well, everything just went on sale for you. So you can look for bargains now as things have dropped substantially here in the last week or so, but don't be greedy. Be an investor. If you're in it, be in it for the long haul, and do not jump in with more risk that puts your financial stability at risk. So maintain your cash reserves, look for buying opportunities. While we don't like to see what happened today happen, we're not overly concerned, and as we've said before, this too shall pass. Now, that doesn't mean that if you're concerned, you don't have a reason to be, and so feel free to give us a call or shoot us an email or reach out in any way if you're concerned or worried that your allocation may not be appropriate, and we'll happily take a look and let you know what we think. But don't be inclined to say this is the time to sell everything and stick all your cash under the mattress. That would be a long-term, for investors, a long-term mistake. So that was your moment. I hope you enjoyed it. If you did, give us a like, give us a share. We certainly appreciate it. And we'll be back normally in a couple of days, but depending on market conditions, maybe sooner, with another Uncommon Sense update. Thanks for watching.